Ladies and gentlemen, good day and welcome to the matrimony.com Q4 FY24 and FY24 earnings conference call. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pradyut Ganesh from ICICI Securities. Thank you and over to you, sir.
On behalf of ICICI Securities, I would like to welcome all of you to Q4 FY24 earnings call of matrimony.com. From the company, we have Mr. Murugavel Janakiraman, MD and CEO, and Mr. Sushant Pai, the CFO. Over to you, Mr. Janakiraman, for his opening remarks.
Thank you so much. Good evening, everyone. I'm happy to start that in FY24, we have crossed a significant milestone of over 1 million paid subscription. Also, including other income, our revenue crossed 500 crore for the first time. This is an outcome of our focus initiatives on segmentation and customer-centric messages in enhancing the product. Coming to Q4, on a consolidated basis, we achieved a billing of rupees 121.2 crore, a growth of 4.3% quarter-over-quarter and 0.2% year-on-year. Revenue at 109.2 crores, a growth of 1.7% quarter-over-quarter and 4.1% year-on-year. For the full year, we achieved a billing of rupees 479 crores, a growth of 4.6%. Revenue at rupees 481.4 crore, a growth of 5.6%. The key highlights for the matchmaking business in Q4 are as follows. In Q4, the billing was at rupees 119.2 crores, a growth of 4% quarter-over-quarter and 1.4% year-on-year. Revenue at rupees 117.7 crores, growth of 2% quarter-over-quarter and 5.5% year-on-year. For the full year, revenue was at rupees 472.4 crore, growth of 5.9%. We added 2.7 lakh paid subscription during the quarter, a growth of 2.1% quarter-over-quarter and 2.9% year-on-year. We added 10 lakhs and 74,000 paid subscription during the year, which was a growth of 8%. The average transaction value ATV for the matchmaking business grew by 2.4% quarter-over-quarter and declined by 1.4% year-on-year in line with our customer acquisition strategy. For the full year, ATV declined by 2.5%. In the Q4, you may know that we had an issue with Google. All our apps, matchmaking apps, were removed from the Play Store for almost 4-5 days, and then we were able to get the apps back on the Play Store thanks to the intervention of the government. It also caused some disruption in terms of downloads and the marketing expenses gone up. Now things have been streamlined. We are back to the level where it was earlier. So in spite of the disruption we had in terms of business for 1 week, still we managed to achieve the growth and able to achieve the profit better than the corresponding quarter last year. Now coming to the marriage services business, the billing was rupees 1.95 crore, decline of 7.5% quarter-over-quarter and 41.4% year-on-year. The revenue was rupees 1.52 crore, a decline of 34.2% quarter-over-quarter and 47.6% year-on-year. Basically, we are taking steps to achieve the breakthrough in the business. The reason for the decline was on account of the changes what you are doing to get the business to achieve profitability at the end of the year. For the full year, billing was rupees 8.7 crore, a decline of 21.1%, and revenue was rupees 9 crore, decline of 7.1%. Loss in the quarter was rupees 2.4 crore as compared to losses of 3.2 crore in Q4 of FY23. For the full year, the losses were at rupees 10.3 crore as compared to the losses of rupees 13 crore in FY23. We hope to achieve the break-even by the end of FY25 in the wedding services business. On the billing and revenue outlook for Q1, matchmaking and wedding service revenue will be at a similar level of Q4. We have launched Mera.com, an exclusive dating app for Indian American, and we have planned to launch Love.com in the next couple of months. an app for matchmaking, serious matchmaking space to address the next generation segment. However, this will take some time for us to achieve yield revenue. Probably sometime in FY24 or 5 it will start contributing revenue. We intend to keep it for free for some time. As a first in this segment, we have launched elite matrimony kiosk at airport across 3 Indian cities such as Chennai, Bangalore, and Delhi. We expect this initiative will provide added visibility and increase traction for elite services. Let me now pass on to Sushant to comment on the key profit highlights. Sushant, over to you.
Thanks, Muruga. Good evening, everyone. Our EBITDA margin for the matchmaking business in Q4 is at 19.1% as compared to 18.9% in Q3 and 21.1% a year ago. For the full year, EBITDA margin for matchmaking was at 20.9% as compared to 21.4% in FY23. Marketing expense for matchmaking in Q4 are at 47.9 crores as compared to 45.5 crores in Q3 and 45.3 crores a year ago. Marketing expenses for the full year was 182.5 crores as compared to 178.3 crores in FY23. Excluding marketing expenses, our margins in matchmaking are stable at 60% in FY24 as compared to 61% in FY23. On a consolidated basis, our EBITDA margins in Q4 are at 14.2% as compared to 14.3% in Q3 and 15% a year ago. For the full year, EBITDA is at 73.5 crores, which is 15.2% margin, as compared to 75 crores, which is 16.2% margins in FY23, a decline of 2%. Tax rate in the quarter is at 23.7% as compared to 22.8% in Q3, and for the full year is 23.4% as compared to 16.6% in FY23. You would have observed last year in FY23 we had a lower tax rate. This was due to the lower tax on realized gains on mutual funds, which were redeemed to fund the buyback amount in FY23. Profit after tax is at 11.7 crores, a growth of 5.6% quarter on quarter and 2.9% year on year. Share of profit from Astrovision, our associate company, is 7.7 lakhs. PAT for the full year is 49.6 crores, which is a 10.3% margin, as compared to 46.7 crores, which is a 10.1% margin FY23, which is a growth of 6.2%. If not for the disputed Google service fee, which we have provided, our PAT margins would have been better by about 300 basis points. Also, if you recollect, we also had the profit on sale of land in FY23 as a one-time profit of rupees 5.8 crores, which was not there in FY24. So considering all of this, I think we've done very reasonably well in profits for the year, if not for the Google service fee and also the one-time sale of land, which was in FY23. So cash balance is at 358 crores. ROCE is 15.5%. On the outlook for Q1 margins, we expect the PAT to improve slightly in Q1 from Q4 levels. Other announcement for the quarter, the Board of Directors at its meeting held today have recommended a final dividend of 100%, which is 5 rupees per equity share of par value of 5 rupees each, subject to the approval of the shareholders. I would like to end with the customary safe harbor statement. Certain statements during this call could be forward-looking statements on our business. These involve a number of risks and uncertainties that could cause the actual results to differ materially from such forward-looking statements. We do not undertake to update any such forward-looking statements that may be made from time to time by or on behalf of the company unless it is required by law. We can now open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rishabh Shah from Balarak PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. Am I audible?
Hello, Rishabh?
Yeah. Am I audible, sir?
Sorry to interrupt you, sir. May I request you to use the handset, please?
Yeah, am I audible now?
Yes, sir.
Yeah. So couple of questions from my side. So can I get an idea how big is this market of online marriages, and what could it be in the next, let's say, 5 to 6 years?
Okay. What are the other questions?
So other questions are, what could be the key entry barriers and key risks for your business, sir?
Okay. These are questions?
And one more question is, since online marriages is yet to enter into tier 2, 3, 4 cities, what are your plans to cater to that group of people, since it's the majority of the people in India?
No, sorry, I'm not getting that question. What are the third question?
So the third question is, since the online marriages is yet to enter into tier 2, 3, 4 cities, what are your plans to cater to that group of people, since the majority of the people since that's the most majority of the people in India?
Yeah, okay. Thank you. We expect at this point of time online matrimony, which is among the organized players, will be around probably 1,000 crore. So we are around 500 crore. Put together other players and small players. When I'm talking about online matrimony per se, I'm not including dating and other categories. So only matrimony in my view maybe around there are a lot of small players, maybe around 1,000 crore. And and they've been growing around the CAGR around maybe around 7 to 10% last 5 years. So we expect a similar kind of trend may continue. Okay, that's on the outlook for the matrimony business. When it comes to the second question, what are the entry barriers? It's very easy to launch a matrimony product. Launching it easy, but the challenge is to acquire customers. I think that's a challenge that many people face it already. That's one of the reasons many people who are trying to enter in this segment and fail to make a significant mark is not launching a product. Because why would someone want to create a profile in matrimony group sites? Because we have large number of profile and more chance of someone to getting married, and that lead to the success, word of mouth publicity. Today, large part of our customer acquisition, the profiles are organic. Even the profile what you get through Google also in a way intended for a brand, people are coming through Google as a platform. So what you are able to achieve is the organic acquisition that's contributing the growth and profitability. It's very difficult for the players to acquire the profile. It's not about a product launch, it's about acquiring the profile. It's a challenge for the people. That's a very strong entry barrier for people who want to get into this segment. Okay, because when you have the established players and again matrimony.com being a strong player in most of the markets. So one of the risk about what is the risk we see in the matrimony business. So matrimony business per se, we are not seeing any key risk in all those things. However, in long term, we have to see whether any changing consumer preferences, anything will have a impact on the new members coming to online matrimony. That's something we will keep an eye on, which I don't think, because culturally matrimony is deep-rooted as India as a country. We still is a matrimony going to be very, very strong and continue going to grow. However, there is segment of users, they may prefer a serious relationship route. That's the reason we are intend to launch love.com the next couple of months or so. That's something. So with this, actually, as a company, we have a product for all categories. With that, what you ask in terms of tier 2, tier 3, you may know that we have launched a product called Jodi. First in this, in this segment to target the people who are non-degree holders, because majority of the people are non-degree holders in tier 2, tier 3. Now we have Jodi, which is a completely, it's a very simple product, free for females, and targeting a targeting diploma +2 and below non-degree holders. So basically, we have a various product to cater to various segments. So that way, as a company, we sort of see the opportunity and try to serve that segment or opportunity through the differentiated product offering or exclusive product.
Okay, and so my last question, the online managers into the tier 2, 3, 4 cities?
That's what it's going to Jodi. Jodi is a product to cater to the large number of people in tier 2, tier 3 who are non-degree holders in vernacular and in Indian language. So that's the product Jodi I spoke about. and getting the people to adopt the Jodi, yeah, we've been promoting it, and the product is free for females also.
Okay, thank you, sir. I'll join back in the queue.
Thank you. The next question is from the line of Aryan Sangvi, an individual investor. Please go ahead.
Yes, sir. My question was that the marketing expenses have been around 186 crores just to generate an EBITDA of 72 crores. So is it ideal to spend so much on marketing expenses if we could reduce the marketing expenses, like your EBITDA margin would be better? And so the second question is, I wanted to know what the status of the Google case is. Are we still keeping the provision, and are we going to keep the provision?
Status of the Google provision.
Yeah. So in terms of marketing expense, today marketing spend it at an elevated level because of the increased competitor spend in the various markets. If you see that the category spends on a competitor intensity goes down, then we may obviously introduce a marketing spend that will increase our EBITDA margins. At this point of time, we see that marketing going to be at a similar levels. We don't see any reduction in marketing because still that the marketing spend or competitor intensity is still on at higher level. That's on the marketing spend. With respect to Google, there are things that are going on at various forums, be it the CCI, be it the Supreme Court, and so also the government plan to come in with the digital competition law. There are various things at this point of time. Various things are happening at this point of time. We also sort of change the business model to overcome this challenge. So yeah. At this point of time, we don't have any provisions with respect to Google.
I think just to add, for the last year, we have made a provision based on a best estimate basis, based on what we consider is based on the developer distribution agreement. We have already made a provision for last year.
Okay, sir. Thank you.
Thank you. The next question is from the line of Siddharth Srikumar from iThought Financial Consulting LLP. Please go ahead.
Hello, thanks for the opportunity. I have two questions. One is for FY24, what is the provision with regards to Google developer service in amount?
See, the Google case is a very sensitive case, and there are very dimensions involved in this case. So we are not disclosing the exact amount on that case. However, I've given you an indication saying that our profitability margins at a PAT level would have been higher by about 300 basis points if not for the Google service fee, disputed fee.
Understand. So the next question I have is with regards to Jodi, the new product that you launched. Approximately, what is the revenue for FY24 that this platform has done?
Actually, we are not sharing the individual breakup of the businesses, and so yeah. But in terms of Jodi, we are getting a profiles, and so we are also marketing. We see some traction and growth on the segment.
Okay, so like you are seeing traction in that product since its launch?
Yeah.
Okay, fine.
It's still a small part of our revenue, so and for competitive reason, we are not sharing the details.
Okay, fine. Thanks.
Thank you. The next question is from the line of Ankur Jain, an individual investor. Please go ahead.
Yeah, hi, good evening, sir. Thank you for taking my questions. The first question which I have is about this, the provision that you have made for the Google case, and Mr. Sushant just mentioned that it is on a best estimate basis that you have provided for it. So I was slightly confused about it. Is it, the provisions that you have made, is it on the best estimate done by the company, or is it mandated by the High Court judgment which said that 4% of the sales have to be provided?
Yeah, the estimate is based on what we believe is under the agreement which is disputed. So the High Court only gave an interim judgment to deposit some money to Google, which was at 4%, which we have done whenever they raise the invoice. But however, the agreement says something else, and therefore based on that agreement, we have made a best estimate basis that is internal. It is not based on the High Court judgment.
Oh, okay. Thank you. And second question is about the same, Google case, that when we read the Google guidelines about the revenue share, which they ask the companies to share, they mention like 15 or 30%. So there are a couple of categories, and two categories are 15 or 30%, and it is dependent on the subscription model of the company. So where does matrimony fall in that, out of those two categories?
So Google, the 30% is mainly for the gaming companies, and the non-gaming it's around 15%. So there are three models. One is the Google billing payment system. Then you introduce that model where you pay 15%. When you use your own third-party billing options, you have to pay 11%. And the third option is where you cannot even allow to get payments from customers through the app. There are multiple options. So what you've seen is that the people implement any of these options, the options are the revenue impact as well. So with respect to your question on 15%, where matrimony comes into 15% category if you have to go with the GPPS option. However, if you implement a user choice of billing, that's one of the options where you pay 11% to Google. So that's the way it works.
Okay. Thanks. And about some of the initiatives, you mentioned about Jodi, that it is getting traction. Could you also share some qualitative thoughts on the Elite Matrimony, where you set up the kiosk on the 3 airports, and also on the wedding services business, because we were expecting that wedding services business would, achieve break even sooner, but now it is postponed by another 4 quarters. So what's the qualitative thoughts on these two things, Elite Matrimony and wedding services?
So Elite Matrimony, obviously, India as a country is growing, and the number of rich and affluent people also are growing. We thought, airport is a good place to create a brand for Elite Matrimony. And, it's all new initiatives. We just setting up these kiosks and hoping to get a better visibility among the elite people who are traveling. So again, it's all very new. It's all the last few months. So we believe it's a good place to target the elite people. So while as we progress, we have a better understanding of the whole kiosk and the attractions going to come on because of setting up kiosk in the airports. That's an Elite Matrimony. In terms of wedding services, yes, I definitely, that was a plan that we want to achieve the break even before the end of FY2024. However, some of things did not go the way we thought about it. So we have done some restructuring, and so we see definitely that it's going to optimize the cost, and with the changes what we are making, yes, we believe that we could able to achieve the break even in this year, because yes, last year was a plan but did not happen. Yeah, we are also looking at we launched, by the way, new version of weddingbazaar.com. We also intend to launch a new version of mandap.com maybe sometime next week or so, or maybe within 2 weeks. So we are making some product changes. We are also looking at some kind of offering which help us to have a better traction in terms of some of the areas, and also that some offering which will help customer choose our services compared to what they are currently choosing.
Okay, thanks a lot. I'll join back the queue.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Sanchita Sood from Robo Capital. Please go ahead.
Hi, good evening, sir. My question was, are we still on track to achieve our 1,000 crore top line guidance for the next 5 years?
Yeah, definitely. That's the thing. We want to get that. Okay, so trying with new initiatives. We already know we are intending to launch a new initiatives. Love, and we are also looking at launching. We launched Mera Love, exclusive area Indian American. See, some more thing, we are also looking at launching astrology service as well. So a lot of the initiatives are in the work. So we are to really trying new things. So we hope that combination of all these factors and some of them going to drive it also. We hope that we can be able to get to that number. That's the goal. That's the number we want to chase now.
Okay. And sir, if you could provide us any revenue visibility for FY25 and 26, how will love.com and Mera Love, what kind of revenue can they provide us in FY26 and FY25?
No, at this point of time, we want the product, maybe first 1 year, we may not even monetize for a couple of quarters because we want to get the users and get the traction before you monetize and all that. So for this year, we don't see any revenue coming. If at all anything, maybe some revenue may come in maybe quarter 4 of this year. So at this point of time, we can assume that revenue coming from these businesses is all investment for the couple of years down the line. Or maybe at least some revenue will come next year definitely, but they're investing for the future.
Okay, all right. Thank you, sir, and all the best.
Thank you. The next follow-up question is from the line of Rishabh Shah from Balark PMS. Please go ahead.
Yeah, thanks for the follow-up. So I have a question that there has been many ups and downs in your business. So what were your key learnings from the past failures, and how do you tackle the situation and move on?
Sorry, I think can you just repeat again? There's some past failures in order learning from past failure. What are the other part of the question, please?
No, so I was asking, there has been many ups and downs in your business. So when you had your past failures, what were the key learnings from it, and how did you tackle the situation and move on?
It's a more of every failure we see as a learning opportunity. So that way we look at we don't see the failure, we look at what a learning opportunity. As a company, we are never averse to taking a tough decision if situation warranted on. So whether I can go back in 2000 early days of when they we went to the franchisee route. We realized that franchisee probably not the model for a matching business, considering we are not offering a product, a service category where a lot of emotions involved and personal touch required. So that led to the change of closing the franchisee or buying the franchisee, launch our own outlet. So one time we had a more outlet, we cut down the outlet, we realized that the model was not appropriate. So there is, every time you do something failure, look at what are the learning opportunities. So many things went, in our favor, many things did not go. So that way, I wouldn't say one single thing. But one thing I would say that, yeah, definitely the challenges are not somewhat challenging. Help us to run a more efficient and, the operation. So I would say nothing like in specific things. It's more of various learning over a period of last 2 decades and helped us to become what we are. So, but we always try to be nimble and be open. And now that we know it all, we're always open to learn, open to change, open to try it out. But we want to keep the energy, enthusiasm of being entrepreneurial, trying out things, figuring out. I think it's more of that's the culture we want matrimony.com to continue to have and continue to use those things to drive the growth.
Okay, so my second question is, do you see that going further down the road, that this online marriage market becoming a 2-player market, that a second player acquires the third player?
See, internet per se, I think that's there may be other players, but normally the 2 players have the large share of the market and all. I think that number 3, number 2, all very small. If you look at any online, it's always the case in all those things. So I think that's sort of thing in order. We look at normally number 3 player, number 4, less than 10% market share. I think that's the way it is. It has been in most of the online categories. Yeah, the other players be there, but number 1, number 2 have the large share.
Okay, so my last question: how has been the transition like before?
What? So what? Sorry.
So how has been the transition? Like 4 to 5 years back, more people were subscribing towards the basic packages, and now the subscription has moved towards. Is the subscription moved towards premium packages?
No, the through various packages, and most of people tend to choose 3-month package. I think that's a normal thing. So that's continue going to be that's a case, yeah. That continue with the case.
So just a follow up on that. So in the premium packages, since that is a greater ARPU business for us, so what are your plans? What are your strategies so that more people subscribe towards the premium packages?
We are talking about personalized services that assisted and the elite and
Sorry?
You mean that personalized services that premium packages? You mean the premium packages? You meant personalized services like assisted matchmaking service?
Hello.
Yeah. Did you mean that when you ask that premium packages, did you mean personalized services or just trying to understand the question?
No, the normal this is sir.
Sorry, clear question. Not can you just kind of really repeat? The question is about because we have a package like a personalized services package. If your question is what are the strategy to try the personalized services package or what is that?
So my question is, when people were subscribing more towards the basic packages,
yeah.
How has the transition been? Like more people subscribe towards the premium packages, and what are your plans and strategies so that people subscribe more towards the premium packages, since that is a greater ARPU business for us?
Yeah. So yeah, it is basically we'll have there's an online package, there is a personal service package. The personal service package at almost like 4 times of the sort of or more than 3 times of the online package. So basically, yeah, the strategy always been segmenting and offering the right product to the right customer. It's an ongoing journey, Rishabh. We continue to segment, continue to help people to choose the right package. It's a thing. Yeah, we continue to do the product improvements, continue to suggest the members what are the right package to choose. It's an ongoing journey. It's part of our core strategies to help members to choose the right packages, the better packages.
Sure.
So I believe you definitely benefit in people choosing the personal service packages. Good for members, good for us as well. We also done the improved our offering so that people see benefits in the premium package to drive more people go for this offer. And we continue to do so. Yeah. Okay. Yeah. Can you move on to the next one?
Yeah. Can you move to the next question, please?
Thank you, Ankur. Ladies and gentlemen, you may press star and 1 to ask a question. Thank you. The next question is from the line of Pulkit Singhal from Dalmus Capital Management. Please go ahead.
Thank you for the opportunity. I have 3 questions. One is, have we experimented with an advertisement model? There have been a lot of companies which have started off with subscription, and eventually advertisement has kind of taken off in a major way. And we seem to have a good amount of free subscribers out there, and we have a very targeted, set of people, subscribers, who would be very good candidates and customers for, jewelry companies or for instance, wedding wear companies and a lot of those things. So I'm just wondering, why haven't we yet started off an ad model?
Okay. Yeah. What are the other questions? Yeah. Is it?
No, you can take it one by one a bit, if that's
yeah, sure. Yeah. The thing is that, so for us, the experience matters. So when you well, definitely that we have large number of users who are free users. The free users will convert certain point at time. So what happens is when the people are coming for the matchmaking, we don't want to bombard them with the advertisement. So while you may get some incremental revenue, that may come in the way of the customer experience. That may even come in the way of converting those users. In fact, use some of these the promotion thing to communicate why should we go for premium membership. We also use this, position to communicate some of the things member need to do. It seems like, because day one people don't give all the information. Things like they need to add photos or need to do the ID verifications or maybe do the adding astrology. So basically, completely nudge or customer to take certain steps so that they can get seriously engaged and see the value in the product, and that they're going for a paid subscription. So it's basically, do you want to trade off, some revenue that may come in the way of customer experience, it also contribute to the subscription revenue. So it's a kind of conscious decision. And while you have some spots and all those things which are non-intrusive to get people in the wedding service, people in the wedding business to advertise and all the things. But you always seen that the advertisement on the matching platform more of brand building, because people are seriously engaged at the platform. In terms of people expecting so many of click-through, unlike other advertisement platform, that the people visit the platform more like casual in nature and all those things. So they may tend to click to banners advertisement, which may not be the case on matchmaking platform, because people are seriously engaged. So it's good for brand building for people in wedding services. While you have some stuff, but that's not our primary focus. We don't want that getting compromised the way of customer experience subscription. So that way, we are sort of selective about these advertisement spots and promotion offers. Yeah.
So to that extent, Facebook also does a lot of advertisement. There is PVR Cinemas who does a lot of advertisement. It does affect customer experience, but then, it has still grown much larger than that. So my sense is there are enough and more examples of companies where customer experience might have been impacted, but ad revenues and experience has not really, impacted them so much that you're fearing that it might. So you might want to just look at it again, because there was a certain thought process 5 years ago. I understand it was there, but now a lot of things have changed in this aspect of advertisement, and a lot of ways of placements of ads are also there, so that it does not necessarily affect the customer experience to that great extent. So I would request the management to relook at this for the simple reason that now our subscription revenue seems to have tapered off. It's a different point when you're actually growing a double digit and we are worried about this, so it makes sense. But we are growing at mid-single digits for last 5 years. And if you're not going to, experiment with an ad-based model, then, how do we get confidence that the next 5 years you'll do double-digit growth, which you're adding to?
So we have to think it through, because as I told you, while it's appreciate your suggestion and all those things, when is there any way of, without compromising the subscription revenue, whether able to get some advertisement revenue, we'll definitely look into it.
Right. Second question was on the margins. You had said that if, you have grown 5-6% revenues this year, and you claim that if the Google provision would not have been there, the PAT margin would have been 300 basis points higher. Now, given that the Google provision is already in the base this year, why would, next year be any different? If you are doing at 5-6%, should we not expect a similar PAT margin increase of 300 basis points? Or is next year very different?
No, the thing is that, we are also looking at the investment in the new initiatives. We spoke about Love.com. So some of the initiatives, it may not yield a significant revenue, So with the more like we are launching new initiatives like with Love.com, Mera Love. We are investing because in initiatives. So if you look at excluding those initiatives, the profit will definitely increase. We have to see within overall, whether now we are looking at short-term whether investment of these initiatives. So basically, the increase in on account of not having Google thing, some of the thing may go into the new initiatives. So next year, we look at growing the profit, but since the new initiative is coming up, that may have some bit of marketing go within these new initiatives.
Okay, but you had given a guidance that the A&P spend would be similar to this year. So when you talk about investments in new initiatives, is that more to do with A&P spend, or some other line item which I'm not capturing?
And they're all investing in new initiatives, mainly because on account of investing in new initiatives.
All right. Okay. Thank you.
Thank you. The next question is from the line of Rishabh Shah from Buglerock PMS. Please go ahead.
Thanks for the opportunity. Sir, do you have any idea what any of the matrimonial sites which operate at a global level? And do you think globally can be a huge opportunity size for us going forward?
So matrimony is more like the Indian subcontinent. We're not seeing the matrimony in the global market. Globally, it's a dating market, so it's a completely different than the matrimony market. So it's very matrimony market. It's very big to Indian subcontinent. So and it's operating in different form. That's what it's dating in the Western world. So.
Okay. And sir,
we are talking about the opportunity in nearby countries, that is Bangladesh or Sri Lanka, and we already have some other brand. Again, these are
yes.
very early stage.
Yes. And so, how difficult would it be for a new company to make a company like Matrimony by leveraging the skills of AI in matchmaking services? Would it be able to take the market share of Matrimony, like not immediately, but over the years?
No, it's very difficult. I think the advantage of Matrimony has been strong brand equity. Most of the profiles are organic, and we are well entrenched in be it language-wise, community-wise, our physical presence, and the number of marriages. Millions of people got married, 2 decades of the service. So there are a lot of brand equity into things, not just a product or That way, we don't see that someone's going to get into this thing and going to take over the matrimony market. So we are taking steps to further grow on all this. I'm not seeing that some global company getting the matrimony, and it's not even the India. And also the understanding of cultural nuance is very difficult. It's a combination of the brand equity, network effort, understand cultural nuances, grown presence, and we have almost so many matrimony sites. So all these factors would make it difficult for anybody to make any significant improvement in that.
Okay, thank you. And sir, have you tried to see this as an opportunity to tie up with these big event planners and scale up your wedding services business?
Yeah, that's we have wedding planners use our platform. So the thing is that we want to operate as a platform play rather than getting into doing even by ourselves. So I think that's the model we are trying to do. There are some challenges which we are trying to overcome, but yeah, definitely we work with various wedding service providers, including photographer, makeup artist, wedding planner, caterer.
And so my last question is, so since the last 4 to 5 years, what has been a major chunk of our business? Is it the renewables or majorly the first-time payments, the first-time subscriptions? And what proportion do you expect to increase going further?
See, the business is a combination of both first-time payment, renewal, and we have a very good renewal rate that's been sort of healthy. So because not everyone can find a life partner within 3 months, so they continue to use the platform. So those things are the very healthy trends. We're not seeing any changes happening on those trends. So continue to grow. Yeah, we need to look at the 3 levers which continue to talk on matchmaking business: increasing profile, increasing conversion, and driving the ARPU. So these are 3 levers. We continue to work on driving all these levers.
Okay. Thank you so much. Thank you so much for answering my questions.
Thank you. The next follow-up question is from the line of Ankur Jain, an individual investor. Please go ahead.
Yeah. Sir, my question is about this note in the results that it mentioned that the company changed its business model, and you also mentioned in your remarks also. So could you just help me understand better what exactly was the business or accounting model before the apps were delisted, and then what do you mean when you mention that the company has changed its business model?
See, basically, so we look at the Google billing. If you have only an online digital service, so you are forced to use one of the Google billing payment system. If you are offering a one-to-one service or some bit of human element involved, then you don't qualify under the digital services. There you are not compelled to use a Google billing payment system. We made a product enhancement where all our packages comes with some of the additional benefits offered by the people. So that way, we don't qualify to be part of the digital services. We are not compelled to use the Google link payment system. So the more of we are providing additional services, additional offering to our customers. Yeah, those are the changes.
Okay, so this is the change which has been made post the delisting of the app from Google Play Store?
This is done post that. Yeah, it took some time to make all those changes. Yeah, yeah. Yes, we done post that one. We made the product changes. We done that. Yeah, post that one. Yeah.
Okay, so now does that mean that with this change business model, and if this stands the scrutiny of the legal the litigation which is going on, then you may not have to use the Google, this money that we have to pay, the commissions that we have to pay to Google?
Yes.
You may be completely out of that?
Yes.
Oh. Okay, thanks a lot, sir.
Yeah.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Okay. Thank you so much, and thanks for the interest. I look forward to continuing interact with you.
Thank you all. Look forward to speaking with you in the quarter. If you have any questions, do write to us. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.